I look at Bitcoin right now as the world's #1 leading indicator, and it's broken back down. Now stock markets are going down, broken down too. Everything went up together, everything went down together, or it's kind of rotating. It's just
So
everything's so coordinated right now. I just want to see it change that leading indicator status. Just give me a period where I can show that, oh, okay, well, Bitcoin showing divergent strength versus a weak stock market. So here's my trader instinct. I come in this morning, look at markets last night, this morning, I see the equity markets up. I think that's great. By the end of the day, stock market's probably going to be down because I look again, yields are up, rates are up. And I look at that as like, okay, that's a negative, just bad. That's just called money leaving the system.
Bloomberg Intelligence's senior macro strategist, McGlone, delves into the elements influencing the recent decline of Bitcoin. McGlone holds the belief that Bitcoin, which has been one of the most successful assets in history, he shares certain resemblances with the stock market of 1930. It's been a rough go for Bitcoin and the broader cryptocurrency market over the past week as the top crypto saw its price plunge 12% on Thursday to go along with an $81 billion decline in the total crypto market capitalization. Bitcoin has lost around 62% of its value since 2021's all-time high of $69,000, being exchanged for as low as $26,045 currently, as Bitcoin struggles to recover its demand in a moment of uncertainty for the crypto market. According to Reuters data, the Dow and S&P 500 ended slightly lower on Tuesday as investors stayed worried the Federal Reserve will keep interest rates higher for longer and as bank shares eased. Additionally, considerable downward pressure is emanating from Asian markets due to ongoing challenges faced by China's economy. As per McGlone analysis, Bitcoin appears similar to the U.S. stock market in 1930. He said Bitcoin's trajectory is currently downward, in line with the 100-week moving average, even as the Federal Reserve continues to raise interest rates. However, a crucial difference exists. During the stock market's performance in 1930, it was reacting to rate reductions as an effort to rescue the situation. In the early days of the Federal Reserve, interest rates were quite stable, with the federal funds rate hovering around 3 to 4% in the 1920s and 1930s. That latest increase brought the Fed's key borrowing level, known as the federal funds rate, to a range targeted between 5.25% to 5%, the highest level in more than 22 years. In the interview, McGlone suggested that there's a possibility of returning to the average values that existed before the significant surge in Bitcoin's price, a period when it was trading below $10,000. Let's direct our attention towards video.
Markets go to the point, where they can create the most pain. That's bottom line. Getting into how you fix the transmission on the car is something I learned to deliberately ignore in the trading pits in the 80s. And that's why I wish the best for traders. Most of them lose money. A lesson I learned from Jim Rogers. A lot of you know who he is. If you don't, Google him. I met him probably 15 years ago, at least 10 years ago, in Singapore at his home. Was the best positions he's ever had are the ones he involved in, never looked at, just I don't want to see the statement, don't look at the trade. That's the way I see Bitcoin. You're not supposed to trade this, although it's the best trading vehicle in the world. Let those absolute complete professionals trade it. And that's the thing I learned in the trading pits. Those guys who traded analog back then were a bunch of Slavs, but they got in the pit, they'd rip your head, they're a bunch of sharks. Now it's just so automated and bots and everything. I just say, thank you. No, I say don't mess with it, but you hit stops. The path of least resistance right now for Bitcoin is down. For the stock market, it's down. For bond prices, it's down. For the Fed to raise rates, it's still up. That's the bottom line. We're in August, and we've had this massive bounce in all risk assets. So I look at this as this is the beginning of something that's really bad. And then I ask myself, why is it bad? Well, the bottom line, #1 lesson in markets is liquidity. The M2 is running. Money supply is still negative, most ever, 3%. The Fed is still tightening rates. China is playing out like an Ayn Rand Atlas Shrugged. It's one person trying to manage an economy that's way overdue for collapse. Most of the trading in the world really for cryptos comes from Asia. And I look at this as Bitcoin's the best leading indicator. So I'll end with this. Let's look at just simple numbers. And the goal is not to get people upset, but I need to point out facts of where we are. Right before we had this massive pump in liquidity, M2 money supply, which went up 40% from the end of 2019 to the peak in 2022. If you look at every risk asset, stock market's basically unchanged versus that. Gold's basically unchanged versus that. Commodities are basically unchanged versus that. And Bitcoin's up about 200% versus that money supply. So I look at this as it's very likely we're just going to gravitate towards those means that we were trading at right before this big pump. In Bitcoin, that was below 10,000. I just pointed out facts. In the S&P 500, it was below 3,000. It's around 3,000. And crude oil is 57. So that to me that's the current trajectory. Going back to those levels, and the bottom line is the Fed's still tight. So if we want to focus on macro, I'd say forget about trading. Let the people, those other, all these things I really deliberately click off when I click on cryptos when they talk about trading. The market's gonna go up because it went up. Be careful with those mantras. Those days are over. We've just had the biggest zero interest rate policy rally in our lifetimes, and it's all changed except for in one country. China's cutting rate. So I look at this as that asset that led the way. I published about this morning, that Bitcoin to me looks like the stock market did in 1930. It is heading lower on a 100-week moving average. The Fed's still hiking rates. The big difference with the stock market in 1930 is the Fed was cutting rates and trying to help save things.
Federal Reserve officials expressed concern at their most recent meeting about the pace of inflation and said more rate hikes could be necessary in the future unless conditions change. According to Coinmetrics, Bitcoin's correlation with stocks is at its lowest level in 2 years, but in 2022 it shot to an all-time high in response to the Fed's rate hiking campaign to tame inflation. In his tweet, McGlone said, "A historical context, the last instance of a U.S. Treasury 2-year note yielding approximately 5% occurred before the financial crisis and the emergence of Bitcoin, possibly signaling challenges for various risk assets." During interview, McGlone said, "I'm actively searching for indications that could potentially reverse the existing downtrend narrative in Bitcoin."
I want to see to turn bullish. Here's a key thing I want to point out is 2018, I think it was 19, when the New York Fed came down on Tether and Bitcoin and Tether wobbled. It was around 5,000. That's when I got bullish on Bitcoin, around 5,000. Again, it went to 69. Didn't get the top, but that was a pretty good signal. I'm looking for any kind of signal to flip this downtrend narrative, which is clearly intact. And fundamentals are great. That's why I think in the long term, buy, hold, and invest. But in the short term, the best performing asset in history can easily go back to 10,000. It's still the best performing asset in history, particularly if and that, of course, is key thing about all correlations go to 1, but you can't, this stuff has never happened in our lifetimes. We have money supply running negative. Bitcoin, it's never happened in our lifetime, life of Bitcoin. The 100-week movement average is trending lower. The high in this move was at the 100-week movement. If it's heading lower, the Fed is still tight and the stock market's potentially rolling over. So to me, it's the macro, and Bitcoin's just that leading indicator. And what's Bitcoin usually do? It overshoots. And it's also such a baby. I mean, it's just been around for so long. So I agree with the macro. That's why I started out. We're supposed to the buy and hold investors, but the traders, I think, are smart enough to know is you're supposed to be selling rallies. And by the way, because Fed's against you, and most all risk assets. And if we get lucky enough that we don't have a normal recession, hey, I'll end with this. We had our a mortgage analyst on this morning, Eric Idleborg, pointing out, mortgage is heading to 8%, and pointing out the affordability index in U.S. housing is the lowest since the 1980s. We've never had an affordability index this low without a severe recession. That's global. I mean, it's worse in China. So I'm going to point out the macro. And here's, I think, about how important Bitcoin's in the macro is when I fill out my taxes, I have to point out if I buy, hold, or sold any type of cryptos. I've never seen that in any other asset.
Bitcoin, one of history's best performing investments and a leading indicator, resembles the stock market in 1930. The historical significance of the 1930 stock market crash serves as a somber reminder of the far-reaching consequences that unchecked exuberance can unleash. Furthermore, as central banks like the Federal Reserve strive to curb inflation through interest rate hikes, echoes of past economic challenges reverberate. Most Bitcoin analysts are expecting BTC's price to start increasing soon, ahead of the block subsidy halving, which is set to happen in April 2024. That wraps up our conversation for today. Feel free to share your thoughts in the comments section below. If you found this information valuable, give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.